Hello and thanks for joining me for our June monthly market update. It seems mind-boggling that we're nearly at the halfway point of 2024. Preparations for end of financial year are well underway here, with outgoings budgets for FY25 having been issued to tenants and much of our statutory reporting all but complete. End of financial year also brings with it some operational changes for the majority of businesses and their staff. Fair Work have announced a 3.75% increase to the minimum wage effective from 1st of July. Whilst this puts further pressure on many businesses already struggling with increased costs, it will be a welcome cost of living relief to many employees. When coupled with the federal government stage 3 tax cuts also coming into effect on the 1st of July, many families will feel a little extra room in the household budget. Much of this is being watched closely by our friends in the banking sector. The Big Four have all revised their position on interest rates, and whilst it's still a watch and wait scenario, there is a clear consensus that rates will remain on hold now until the middle of next year. Inflation is proving particularly stubborn, and with households having a few extra dollars following July 1, there is genuine concern that inflation above 3% is with us for a while longer. The local commercial property market continues to go from strength to strength. Underpinned by a severe lack of supply, values have escalated further this year despite construction costs having stabilised. Population growth and a general confidence in the Bayside has us bucking many of the broader trends despite some headwinds in the retail economy. Growth in the service economy continues, with a high demand coming from both the financial services sector and healthcare providers. With an ageing population, particularly in Redlands City, those areas are seen as almost bulletproof. Industrial demand continues unabated. Owner-occupiers continue to drive this growth, and with a chronically low supply of stock and no future land supply, pressure continues to mount on underutilised assets for redevelopment and on councils to reassess their approach to the release of future industrial land. Remaining stock in Redland Bay is disappearing quickly, and with only a handful of resale buildings listed, it's never been more important to act quickly. Have a look at the links in our newsletter for some tremendous opportunities currently available, including 3 Redland Bay Road, the highly visible Godfrey's building currently being offered for sale with vacant possession for the first time in over 20 years. Our property managers are busily tidying up our portfolio for end of financial year. If you self-manage your asset, it's a great time to do a health check. Simple things like rent reviews and outgoings recoveries make a huge difference to the performance of your investment. As always, our team remains ready, willing and able to provide assistance. That's it from me for the month. I'll see you in July. Cheers.